to produce results. So in short, Mr. Chairman, Mtapa Investment Fund is the sovereign fund of Zimbabwe, which is designed to protect the current and future citizens of this country, and therefore it is a government entity. It is the investment arm of Zimbabwe. So we're happy to be here, and research is shown that the only way to unlock value for the entities, commercial value, so of companies, government, is to do what we've done. So like I said, it's a game changer, it's a milestone, and it was necessary to go through.
Thank you very much, Dr. Magunja. So we're now going to go straight into your audit, and then we'll go to any other issues that may arise. I will start off. The first finding was that non-compliance to IFRS 9 and IFRS 13 on initial valuation of Mutapa investments. These are international financial reporting standards. Because the auditor found out that investments in subsidiaries of Mutapa are 18.9 billion, and associates 80.33 million, and financial assets 42.7 billion were not measured at fair value when they were vested in the fund on 19 September 2023 and 15 March 2024. Because IFRS 9 requires that financial assets be measured at fair value at the date of initial recognition. And the fund's failure to do so means that the opening capital contribution is potentially misstated, and also that subsequent fair value adjustments in the income statement are unreliable. And without an accurate baseline valuation, Parliament cannot assess whether the fund is creating or destroying value in managing the country's strategic investments. So my first question to you is, why did the fund fail to measure investments in subsidiaries, associates, and financial assets at fair value at the dates of initial recognition, that is 19 September 2023 and 15 March 2024, as required by IFRS 9?
Thank you very much, Chairman, for the insightful question. If you, from what I've just said about how the fund was established, it was established through the statutory instrument 156 of 2023, which vested these entities under Mutapa, and the government, which owns these assets, is still owning the assets through the fund. What came out first, Chairman, is the statutory instrument, which says that we are taking these entities under the fund. And the auditors are also right in what they've come up with. So it's what I can call a substance over form, meaning that the form being the legal part of establishing the fund. We say the fund was changed its modus operandi on 19 September 2023. And therefore, what came out first was the instrument. And after the instrument was gazetted, then the board of the fund was put in place on 8 December 2023. And the staff of the fund came in place on 1st April 2024. And subsequently, a number of employees have been employed to ensure that they look after the fund. So when I say substance of a form, it means that there was supposed to be the creature called the fund, and then the people to run it. So it means that when you now look at the substance of a form, it means that the auditors now look at the substance. That yes, the legality is there, it was formed. But on that day of formation, there was no take-on balances or initial recognition of the assets. But assets were in existence because there were no new assets. There are assets coming on from the existing entities. Like, for example, ZESA or Holdings. There was always ZESA Holdings. even before the transfer. So what are transferred with assets? So there's always this notion whereby in terms of accounting, it's true that if it's 9, it's supposed to have initial recognition. But because of the legality that you're supposed to have the company first before it is valued, that's what happened. So we are working on that. We worked on that, Chairman. In fact, what happened was that when the management was put in place, we therefore working very hard to ensure that we to do the valuations. So we employed a number of independent accounting firms to do the valuations, so that this will comply with that IFRS 9, which was basically, if I use a term that it might be possible, Chairman, to be understood, that it was not possible to have valuations at the time of the instrument, but that was more like a decree. So we cannot have it before. So it's a factual impossibility. So to say, it's factual that there was nothing which was done before, but it was a factual impossibility because there's no one who could have done that type of work either. So what we've done, Chairman, is that once the fund staff management was put in place and the board was put in place, we then went on to do the valuations of all the entities, and we are very happy with the work that has happened to come up with the numbers which are fair and reasonable values for the entities using the companies that are various. We don't not use one, we use a number of entities to ensure that the values are so determined. So yes, it's true. On the initial take-on balances, there was no possibility of doing that valuation before and so on. But what gives us comfort, Chairman, is that these entities existed before. And therefore, these entities, it was not a sale which was done by Mtapa. It was a transfer of the same thing that government has in POSB, in Homelink, in ZESA, and put it under Mutapa. So those companies already existed, but in terms of accounting principles, it's supposed to be adhered to. That's why we had to do all the valuations, which we are happy. So those valuations, 16 billion gross and 14.7 fair asset value. We think that as of that time, that was a fair value for our assets, of which it had been certified by the auditors, not our auditors, the fund that it was a departure, of which we agree, and that's why we don't need. But going forward, it won't happen again, because they now take-on balances are now the outbid that was done not on the 13th of September, that was done by the end 31 December 2024. Thank you, Chairman.
Thank you.
Yeah, thank you so much, Chairman. Dr. Mangulia, you acknowledged that there was a misstatement, and I wanted to find out what has been the impact of this misstatement on the financial statements, and what are you doing in order to cure the misstatement?
I would prefer to use that there was a qualified audit. Chairman, if I hasten to advise that when it comes to audit, there are 4 categories of audit. The first one is unqualified visiting audit. The second part is now the qualified audit. The third is called adverse audit opinion, and then the fourth one is a disclaimer opinion. Now, those are the categories of the audit. When an auditor says is qualifying, he says that he's not saying that there's misstatement. No, he's saying that this audit they substantially reflect the true and fair activities of the financial statements. But to the readers and to the August House, take note that the valuations which constitute 90% of the balance sheet of Mtapa, though there were no valuations, there was no valuations were done on the take-on balance. But what we are saying now today is that it's not a misstatement per se. It is an observation. Well, those companies existed even before the transfer into Mutapa, which means us as Zimbabweans, that's why we are happy with the information of Mutapa, because all these things, these companies always existed. But no one had asked before that what is the value, say, of this? But they always existed. What the value, or say, of net one? But they always existed. Now, this putting them together, collaboration, it means that our job now is to ensure that it is being done and implemented. So what are we doing? What we are doing is that upon taking over office at Mutapa, the first job that we did is management, and the board is to ensure that the valuations are done so that we know exactly what is the value of the fund. So that has now been done. And but as at the end of December, it was done, and we are continuously doing it to ensure that the values, they represent a fair value for Zimbabwe. And we've looked at, if you look at, I will just give an example. If you look at a company like CSC, there's a blend of land in this country. Okay. And a number of properties. We've employed valuers to ensure that they go out all the ranges, the 11 ranges of CSC. Some which have been occupied, of course, and all the properties. That is Mtapa have done, which has never been done before. So we now have a value of CSC, which you can bring even to and say, this is the CSC value. We go to a company like NRZ, blend of real estate, including big firms. Again, we have all that documentation. So we have gone very far to ensure that we give Zimbabweans their fair value of their assets. These are citizens' assets, and we believe that what we've done is the best which cannot be done before. So to answer the question in simple terms, that we have employed a number of valuers who are giving us information or statistics, which is very critical for this economy. Thank you, Chairman.
Now that I think it's confirmed that the evaluation is now done and complete, maybe just for the record, what is the new value now for the entities under Mtapa?
Thank you, Chairman. What we are saying that as of the 31st December 2024, the value of the assets was 16 billion in terms of gross asset and 14.7 billion in terms of fair value of the assets. Those ones are confirmed. What we are now doing right now, we are now working on the accounts or financials for the year ending 2025. We have used again the same models, and it's under audit right now. By the end of March this year, we're going to have our audited accounts for the year ending 2025. And because of what happened globally, if you look at the gold, for example, if you look at an asset like our gold resources, the gold resources have gone up. So when you look at the mine, you look at the explored mines, which is called using the JOC reports. This is evidence-based. So because of that, you find that the price have gone up. So it means our figures for 2025 December definitely have gone up because of that valuation, and also because of prices have increased. Lithium was very low, but now the price have gone up again. So the figures for 2024, those ones are confirmed, which the auditors were saying that they don't query the figures, but they're querying that the way it was done, not at the take-on balance, but after the take on. That was the major issue of number one. Otherwise, we're finished now.
Honorable Chidua, the Honorable
Yeah, thank you, Chairman. Yeah, I just wanted to find out in terms of the valuers, are you only using your own valuers or you also got independent valuers?
We are all using we don't have ours. The way the fund operates, we've used the model of the Middle East type of model, whereby most of our work of this nature they will do through outsourcing. So this is all outsourced independent accounting firms, and we paid for that work to be done on behalf of the people of Zimbabwe, so that we know exactly what is there. So we've outsourced to get all that information, and not by one company, but in the many 7 companies that have undertaken this exercise because of the seriousness that we have put to this exercise. So 7 outsourced companies have done that.
No, thank you, Chairman. 2 questions. The first one, you indicate that you have actually hired companies to do the valuation. So can you confirm to us what valuation methods are these consultants that are doing valuation using in terms of the valuation? Then tied to that, initially, when you were speaking, you were saying that you took ongoing entities and you created a picture to us that those ongoing entities had a value. Then in the same breath, you then told us that CSC, for instance, you did what was not done before, meaning that doesn't that then create a challenge that these entities that you were given to be under your mandate, that if CSC had not done a proper job, what guarantees do we have that even these companies that with ongoing entities had also done a fair job in terms of their valuation of their assets?
Whilst the CFO is preparing on the discounted cash flow values on the valuation methods, let me try to answer the last part. That when I gave example of CSC, I was trying to put or to portray the point that valuation of assets, it's not as easy as people might expect. What normal come and do, they use desktop to just do the numbers. They just look at asset liabilities. Then they say my assets are say 10,000, my liability is 2 million. Therefore, my net assets is 8, because they just look at their financial flows. Now, when you are doing a fair valuation of assets, it's a serious job. You need to go and see all the entities or the what makes up that entity. If there are houses, if you're 240 houses, you go and see what is the value of those houses, and then go and see all the ranges in this country, including Mashingo, which is occupied. You say what is the value of this assets. So what we try to do, I was trying to say that as Mutapa, because we were given the mandate to stewardship on these entities, it is now best interest in that interest of the country to ensure that we know exactly what's on the ground. Whereas as a going concern, they normally look at the desktop analysis, look at what they purchased and what they are expending and what is the value they are. So we've gone beyond that. So we've gone beyond the normal textbook of valuation by real evidence based. So that's what I was trying to say. And the companies cannot afford that, because most companies, they find it very difficult, very expensive. It's an expensive exercise to do valuations, but we have to do it ourselves because we want to have these figures which make sense for the country. And also when you come over here to Parliament, wherever you have a conversation, when you're voting, almost 99.5% level of confidence that the value of this entity is this. Why do we say so? Because 1, 2, 3, 4, 5. And then that's what we are trying to do. Otherwise, your question is very valid. in Wipe about it. But on the valuations, it's more, let me ask the CFO to give you the valuation exercise program that we did.
Thank you, CEO. Chairman, honorable members. So just to answer the question with regards to the valuation methodologies used, what you'll find is that the valuers themselves will produce a report, and typically within that report, they will explain the valuation methodology. And the valuation methodology will be affected by the nature of the entities, whether or not the entities are profit-making, whether or not they can predict future cash flows, whether or not the assets and the liabilities are shown at fair value. And they would not just use one method. They may take a primary method and corroborate it with another method, or they will take a combination of the different methods. So for example, we have valuations based on future cash flows. So you'll find a number of the mining entities or trading entities, like a petrol trade, for example, where you can predict the cash flows that will be generated. The valuers will take a forecast, maybe 5, maybe 10-year forecast, work out the free cash flows and discount that, and also deduct the whatever long-term liabilities sitting on the balance sheet. They may also look at an asset approach or a net asset value. So basically taking the assets, not just, because a lot of the assets, if you look at the balance sheet themselves, may have, and this is why Mutapa is here, is to turn these assets around. Some of them have got negative, in a negative asset situation, or at least a net liability position. But it may very well be that they just haven't revalued their property, they haven't revalued their plant and equipment, or maybe they haven't fully taken into account of mineral resources in the case of the mining companies. So in those instances, one could take the net asset value, as long as there is confidence in the valuations of the assets and liabilities on the balance sheet. And the other method is basically your basically calculating enterprise value based on earnings. So where you would compare with similar companies, and you basically take the earnings and you work out a multiple. So in essence, it's not just one valuation, and it's not a one size fits all. It just really depends, and the valuers will use their professional judgment. And not just that, once the independent valuers have done their evaluation, the independent auditors or the external auditors will also review, because they do have valuation experts within their team. I mean, we also have valuation experts at the fund. So there's many eyes that look at these valuations, Chairman. Thank you.
On to the next.
Just, Chairman, so that we don't forget, maybe we will need to be finished with the evaluation report as well, so that as part of the documents that we will need to analyze later.
Thank you, Honorable Chair. I think Mr. Mzambiri has explained on the valuation methods that were used, and I think according to the Auditor General, and quite rightly so, these are level 3. Level 3 inputs based on unaudited financial information from your investee companies. I just want to find out, Honorable Chair, from Dr. Mangujga and his team, on these issues, particularly the issue that the Auditor General found out that investments in unquoted subsidiaries and associates were valued using level 3 inputs based on unaudited financial information from investee companies. I think the key concern here, Dr. Mangujga, sorry, through you, Honorable Chair, is that level 3 inputs are the least reliable in the fair value hierarchy, and they're based on unobservable data. And also, the Auditor General could not obtain sufficient evidence regarding reliability of the unaudited information. And I think this presents a challenge because if we are going to have the majority of the fund being on reported assets base and which rests on unverified financial information, it undermines the confidence in the fund's reported performance and its net asset value. So I'd like to find out from you that of the 11.4 billion USD in unquoted subsidiaries, valued using these level 3 math inputs, what proportion of the underlying investee companies have audited financial statements? We want to find out if maybe a percentage or in terms of numbers, in terms of your investee companies, how many have audited financial statements so that we can test the quality of the data that was used. And also, can the fund provide to us a comprehensive list of investee companies whose financial statements remain unaudited, together with the reasons for non-submission to the Auditor General, and also the value attributed to each of these? I think with that, I yield, Honorable Chair.
Thank you, Chairman, and once again, thank you for the great question. The purpose of why the fund was established was to ensure that we improve on corporate governance. The purpose was to ensure that there is full transparency. I was just looking at the Honorable Word, ask whether she was also in communication with us. Thank you, Chairman. I was saying that the purpose why the fund was established was to ensure that we improve on corporate governance, was to ensure that there's full transparency, was to ensure that the books of accounts in that corporate governance are audited. And over and above that was to improve on the service delivery by these entities to the people of Zimbabwe and contribute positively to NDS1 and Vision 2030. So the purpose of the formation, therefore, the question that you have asked, Chairman, is that it's embedded in our formation, is to ensure that we do not rely on unverified numbers into the financial statements. That is our job. So when we were painstakingly trying to say we are engaging professional auditors, is to remove that inefficiency of looking at the numbers, was to remove that unverified opinion or unverified numbers from the financial statements. So we are working very hard to ensure that all the numbers which we will present to yourselves and also our evaluations which have been requested for are exactly what we believe is a fund. So there are two things. There is at the investee company level, there is at the Mutapa level, and there is at the group level. When you look at our financial statements, there were two components. The Mutapa financial per se as an entity. Then there is the group perspective. We're not yet doing consolidation, but we are taking the assets because our job is to preserve and grow those assets. That's why those assets are critical for Zimbabwe and critical for the fund to manage. So in the management, we've now looked at all these weaknesses that were there, and the greatest of them is the governance, corporate governance, which we are dealing with to ensure that the numbers, they make sense to us and also to the people of Zimbabwe. Out of the 30 entities which we are managing, that is, as group, not as individual companies, you'll find that about 21 of the entities, they are for the financial audit which are being prepared for the year ending 2024. 5 out of those 30, their accounts are being finalized for 2025. And the other 4 or 5, they are under corporate rescue or administration, the likes of Wange, it's under administration. Indraniko Corporation is under administration. And we've just removed the cold storage company from the business rescue. We're now working on a plan to ensure that it becomes a company that is with a long-term life. As we all know, that the CSC is supposed to produce beef for export, and we're working hard on that one. So, yeah, so to answer the question in simple terms, that we're working to ensure that all the companies under Mtapa have their books audited on time, at 40%, then the rest, they are behind. And those are the ones that we are coaching to ensure that this is their books of accounts timelessly audited, of which you find that the likes of Codco, the likes of the small companies, we're working with them. So yeah, so we are working hard to ensure that it's done. Thank you.
Through you, Chair.
Yes.
Okay, for these companies with unedited financial information, what alternative verification procedures did the fund perform before relying on this data for valuation purposes?
Jeremy, let me put it through, Jeremy. I was trying to put it in a similar terms. But let's assume you are selling your house. The house, property. You send the likes of Bad, Knight Frank to go into valuations before you sell. And the buyer also, sometimes they also do the same. They send it also their own what? Valuers to go and see whether the value is the same. And Zimra then do what they call interview to check when they are assessing the capital gains tax. So the same valuations, that is at a smaller scale. The same valuation is what also happens at the enterprise level. We now say, what is the value of any asset in this country? Whether the books of accounts are audited or not audited, there should be a value assigned to any entity. The value assigned to the entity is therefore, it was done by the professional valuers. I gave example of a house, Chairman, because we all live in houses or we have got a friend that have got houses. And I gave that example because what the auditors were saying in the first question, they said that you not value the house that you sold. How do you know that the house that you sold at the value of 10,000 when you do not use any of those two? Now, we are now saying that yes, that one is a point that we say that it's a factual impossibility because the instrument came out first. It's more like a chicken and egg challenge or scenario. Now, having understood that, we then say to ourselves, how do we make good that? So that's why we then employed the professional valuers. Now, the same is true, Honorable Member of Parliament, that because of our confidence in these professional valuers who are renowned accounting firms, they've done the work for us. And then we then have, as the CFO was saying, we all have the quality assurances from independent reviewers who then review whether indeed CAC with a value, for example, of 1.1 billion. Then what does it make up? So there is also a separation between audited financial statements and a professional valuation. Even those, when after doing audit, to give you this information that even when auditors have done their work, you still need to send the valuers to go and what? Do the work. So whether books of accounts are audited or to be audited, when they are auditing, you still send out some valuers to ensure that the comprehensive income statement reflects the valued entity amount. So without necessarily relying on their audit, we relied on the valuation by the professional independent valuers.
Thank you, Chairman. My supplementary question is that I want to assume that in terms of your portfolio performance classification model, is it therefore based on the valuation reports that you are getting? Because the challenge, like she was saying, is that some of the entities that you took, we had a problem with them in terms of their failure to submit their accounts. So I want to find out, how is it the valuation report that you are using to separate, let's say for instance, using the BSG matrix, your stars and your dogs, so to speak? How are you doing it? Is it the valuation report, or have you gone to do other methods?
Thank you, Chairman. I want that in three respects. The first one being that we have looked at the entities under Mtapa, and we have met with all the CEOs of these entities and their chairpersons. We've met with their chief finance officers, that the thing of the past whereby books of accounts aren't audited, we don't like it. In fact, we are trying to reduce the burden from the country and from everyone, that we need to ensure that the books of accounts are audited. But that's the fairest and transparent way of doing business. So as a fund, we don't want any of our entities to have the books of account not being audited. And that thing should be a thing of the past. And that we've told them, and therefore that's the first part. Second part is that in the interim, we are saying we need to ensure that we get the best out of these entities. Despite them not having books of accounts audited, current books of audit, there's a backlog. Some might be 2022 or 2023. That information is of no use today because of the things, because we time value for money. So that's why we employed these independent valuers to go and have a dipstick analysis on them and say, how do we give a value? Yes, it's true that there were no audited statements, but on the basis of that, they said, let's go in. So that's what we've done. And therefore, for the 2025 audit, it means, for example, the first issue that the chairman raised about the initial recognition, that one will fall away. It won't appear anymore because that has been achieved. But the second part that you have asked, that one, it means that the next 2 years, or this year, 2025 and 2026, you find that the issue to do with the audit is still going to be there. Because we need to compare and consistently with the numbers given by the company. So we find that the other two qualifications of the books of account not being audited is still going to be there. Yes, it affects the fund, but the cause of it is the investing companies, which are supposed to manage to ensure that their books of accounts are audited. So that's why I said earlier, the work has been cut out for us to ensure that all that work is being done, and we do it for the purpose of sure that the people of Zimbabwe have a good information on the books of accounts. So that one we are working on it. So it means this year, 2026, it means those are the two qualifications will now drop if we continue to do what we are doing to ensure that the books of accounts are audited in time. So that is our submission. Thank you.
Thank you, Honorable Chair. From your submission, Dr. Maguja, is it possible that you can give us an explanation that gives us confidence that since some of the entities were not giving you audited financial statements, how sure are we that Mutapa Investment Fund, which is the sovereign wealth fund of Zimbabwe, is not currently technically insolvent? And are we assured that when the transfers were done, we didn't lose billions of value in asset value when the transfer was being done to Mtapa Investment Fund. Thank you.
Thank you, Chairman. Let me say that we are very confident. Having been invited to come to Park, we are very confident that, as we said earlier, that the information that we are giving you is true to the best of our abilities, and we are confident that the resources that are there, which are managing, is exactly what we said. I'll give you an example. If you look at a mining company, say Trinidad Baker, you look at a resource definition, which means you are saying what is the value of gold underground. It means both you look at the exploration reports. So if a mine has got a life of mine, say is 10 years, and you've got a resource, say of 2 million ounces, which has got a JOB report, that gives us confidence that this mineral is there underground, and there is a definition, there's a definition, which is called exploration. You go to Roa or Shamba mine or Shawa mine, you say, what is the JOG report, what is the resource definition of the phosphates in the Roa? Then you get those reports. Those reports will tell you, because these are all public information, because you don't get a JOG report unless if it is defined. So because of resource definition, we now say we have confidence, because we never include what's not defined as a resource. If someone today said, no, oh, this mountain is mine, there's gold, you need to send some evaluators, exploration, to see how much gold is underground. Then we now, like if you look at the lithium in the Sandawana, we put that Sandawana into 3 blocks, block A, B, and C. And we confidently advise this Augusta House that the block A is fully defined. There's a JOG report of, I think it's 39 million, 39 million ounces of resource. In other words, the ore that you are going to do there. So that is fully defined. And that definition cannot change even tomorrow, even until, so when you mine, you not be subtracting the quantity that you left. Therefore, that's when you define the life of mine. And you talk about a resource like, say, Indara said, you then look at the professional followers, look at assessment of the track. When you started, that track, it is 278 kilometers of cautions or restrictions out of 2,700 kilometers of rail in Zimbabwe. We've worked, as I said, through partnerships to reduce those restrictions. Look at the locomotives below 30, hiring or listing some, putting in place some measures, structures to purchase second-hand new ones to show that at least we can start working on the ground and the repairing the wagons that are there. And when you look at a wagon is about $110,000. And then you now say, this is a second hand. So, for example, then the value say 50%, for example. A locomotive, if it's new, it's about 3-4 million. Locomotive, second hand, about 2 million. So these are the valuations that are done. You now look at what do I have, the quantity, and you put assign a value. So because we now know all this information, we can confidently say, as your servants, that we are right. Us as the servants of the country, we are giving you information that is right. I was the belief of the parable of the talents, wherein one was given 1, one was given 2, other was given 5. Our job is to ensure that we are beginning where those were one of those servants that were given 2 talents, not 1 which is put underground. By doing what we are doing, we are trying to ensure that we swayed the asset, which is the stewardship of all those assets. So, Chairman, we can confidently say that the figures that were given 14.7 for net value of 2024, and the one that shall be coming at end of this month or in April of the new values, we are confident that they are right figures.
Thank you.
Thank you,
Honorable
Chairman.
Mtapa.
Okay, thank you, Chair. Doctor, you alluded the SERA. Has SERA completed the restructuring, and also to what effect, to what magnitude is the fund going to turn around these entities? Thank you.
The first part, Chairman, SERA completed their assignment and documented to government that we suppose what was ideal for the country is to have a centralized model of managing the state-owned enterprises, the commercial ones. And after they've gone out of the country to check, and there were three ways of doing it: either centralize them and put them under OPC, centralize them, put it as an entity like Mtapa, or centralize them as an individual under means of finance. They then opted for centralization like the other entities, other countries, benchmarking against Ethiopia, Singapore, and other countries. Therefore, they come up with a separate entity, which is an investment arm of government of Zimbabwe, which is Mtapa. So that one they completed, but it's a continuous exercise. There's also some assistance that come from SERA when they interface with the other issues like AFDB, World Bank. For example, we work at World Bank through SERA, whereby we're not creating a dashboard, we're creating a financial and economic dashboard at Mtapa for all our entities. So by a click of a button, we see exactly what is happening to the entities under Mutapa. So that one is almost finalized, and by end of June this year, our dashboard, financial and economic dashboard, will be operational at Mtapa. The turning around, definitely the team that we have at Mtapa, with the experts, we've divided the fund into 6 clusters. With mine cluster, agriculture and industrial, trading, energy and trading, ICT and logistics, banking and finance, and real estate. We put them into 6 categories, and we've got each of them is run by a head of cluster who report then to the Deputy Chief Investment Officer and the CIO, which is the Chief Investment Officer. And this team, then supported by our Chief Finance Officer, Chief Legal Officer, and the rest of the team, we are there to ensure that the entities are turned around for the purposes of creating value for this country and for purpose of creating the future value for the country. So yes, we are confident, and we've started. In fact, we've started. If you look at the company like Sido, if you look at a company like Sido, for example, Sido is such a small company. All what they require is a bit of capital, and they buy maize to mill and package it, control milk, and sell. No brainer at all. Other companies, they do it, and it's very simple to do. We have come to one conclusion in Mtapa, that what we have been taking as an impossibilities are very possible. Airs out must fly. That's what their job. And you say to them, they should fly, starting with the London route, which you believe is very lucrative. And that's what you need there. Instead of buying a plane, you lease a plane and you fly. We have tried, at Mtapa, we do believe that anything is possible. They should move on ground. And what do they have? The only 4 items. The track, locomotive, wagon, and signaling. Unfortunately, Zimbabwe, they vandalized the electricity. It was being Harare, Dabuga. The reason why government put the electrical train from Harare to Dabuga was because your Harare Chikwalakwala Maputo is the best corridor. It's a profitable one. You've got more wagons going this route than going through Beira. Because Beira, Machipanda, is, the too many is mountainous. Therefore, you've got fewer wagons going inside. And also the port in Beira is shallow in terms of the ocean than Maputo. So this is our operative line. The fight was, but unfortunately, it was vandalized. So nowadays, you need to now start afresh. So those are things that we are doing to give you confidence about what we are doing at Mtapa. We have done a diagnostic assessment of all the entities for us to be able to put them in those 3 categories or 4 categories. We say they are cash cows, stars, question marks, and dogs. It's because we've done all the diagnostic assessment. If you look at a company like Noik is a cash cow. So is a company like St. Petro, POSB is a star. And the others are dogs, which are meaning the business, the Boston Inventors Index of defining them. So yes, to answer the question, we want to give you confidence that it is doable and we are doing it. Thank you, Chairman.
Thank you, Doctor. I think we'll now go to non-compliance with IAS on currency translation. Honorable Chidzio.
Thank you. Investment worth 10.33 billion in Zimbabwe dollars are not listed for inflation. You translated using incorrect or inappropriate or different exchange rate. This breaches accounting standards and may have significantly misstated about 70% of the funds portfolio. What justification is there for not restating historical financial information of investment companies denominated in Zimbabwean dollars for inflation in accordance with the International Accounting Standards 29 before translating it into ESG as required by International Accounting Standards 21?
Thank you, Chairman. The inflation adjusted numbers. Inflation adjusted numbers, Chairman, is that in Zim, there is most entities they use inflation adjusted numbers. But then because our entities, their books of accounts, go way back and decide that this all this Chairman, just for purpose of full disclosure, is that the 3 qualifications which were given by the auditors on initial good cognition, on unaudited accounts, and this last one, the inflation one, adjusted, they are all dated. So do with the valuations of assets. So what the auditors are saying, they are saying, what confidence do we have, which was the asset here? All these books of accounts of the investing companies are not audited, but you are providing a figure of the fair value of the assets that are under administration. So this one are audited. Now, in as far as the inflation adjusted accounts are concerned, it's because again these companies they use different sets of numbers. For example, at the beginning of the year, you might have a rate say of 125. By the end of the year, if they say it's now 1 to 30, for example, 1 to 18, so it means those figures are not comparable. That's what they're basically saying. So what we are saying here is that we've gone around this way, a work around of this animal market by ensuring that our independent valuers or independent professional valuers, they give us what we are comfortable with, as opposed to rely on the unaudited books of accounts. And we are saying that all the entities under Mutapa, they should produce audited books of accounts which are current by the year 2026. They need to move from where they are. This year, as I said, 21 or 20 are going to have their books of accounts for 2024. 5 are going to be current we expect that are going to work very hard to ensure that their books of accounts are also up to date. And therefore, that qualification attributable to the currency issue or session of things, account standard number 21. It's 21 in fact. Yeah. So that was going to drop again after the books of accounts have been up to date. But what gives us confidence is because we're using independent valuers to do the work for us. Because we're talking about valuation of assets. That would be the answer to that.
Thank you. Honorable, I'm sure.
Thank you, Chairman. Mutapa Investment is supposed to be the new kid on the block, according to Sarah, to try to create value for the nation. Now, I would just want to find out from you, your investment companies, some of them that are in the dog section, are they primarily because of the old management that Mutapa has actually retained? So if you have got the old management and yet Mutapa, you are supposed to be the new one, what are you doing in terms of ensuring that we will not go back to the old way of doing business, because this is the old management that was used to that, because we do not seem to have seen some changes or some managerial movement, especially in those dog investment companies of yours.
Very fair question. We are doing both. The first and foremost, our philosophy is that Mutapa being the shareholder representative of government of these companies, we transmit our work through the boards that we do appoint. And then the boards, they in line with corporate governance, will then supervise management. And also our belief in our philosophy is that, to go to what you've just said, we do believe that we start where they end. And we have done a diversity assessment of all these entities. Some we've already dealt with those areas whereby we felt that this entity was supposed to go this way, but was going this way. That we've already dealt with. We've changed the boards, the chairpersons, in that process. And we are continuously doing improvement on that area. I was smiling because, Chairman, some of the issues that are in this country was not necessarily because of the lack of skills on the part of those individuals, but also our system, the red tape, which was in the system. So when Sarah made the recommendation to make Mtapa, it's one of our key focus areas to remove red tape. Sometimes you can be a very good manager, but the environment, if it is not conducive, you won't perform. So we've been working on that, and that's why we met all the CFOs, we met all the chairpersons and the CEOs, so that we instill our new culture to them before we destroy the entities per se. Even our Jesus Christ says so. When that person was brought before him, we got this person in the very act what you do. Says even that which you've never, if you know one who have ever failed, let him start throwing the stone. So what we are saying is, Chairman, we do believe in working with people in a manner that is humanly possible. We've done the assessment and we want them to get out of the kitchen by themselves, not by saying us. Otherwise, what are we saying? We need to give them targets. We just signed a contract form, a contract performance with the president and myself. 4 clear deliverables. And those deliverables are done through the entities. So if any of us would making us not be able to achieve our desired target, those are the people whom we deal with. So what am I saying? We didn't want a case by case basis, not as a wholesale or as a wholesale way of doing business.
Thank you. We're going on into mining royalties uncertainty.
Okay, thank you, Chair. What amount of mining royalties has the fund received since inception, disaggregated by the mineral type?
Thank you, Chairman. Zero. We never received any royalties in line with section 14(1) of the Zimbabwe text. Basically, because during the course of business in 2022 through SI 189, it invested those, it empowers the Reserve Bank of Zimbabwe to collect 10% of the royalties earmarked for building of country reserves. And if you look at the Sovereign Funds Act, just about a quarter of the royalties from gold, platinum, lithium, being supposed to contribute towards the funding of the Mtapa. Unfortunately, because of the current situation, it will be double dipping, whereby both the central bank using 189, us using the instrument, the act, also taking royalties and put them to the fund as coffers. So what we have done is to analyze all the acts, all the instruments, and we've made a recommendation to the Minister of Finance that we need to drop, it need to be dropped from the sovereign wealth fund. Otherwise, there need to be an alignment of acts. Right now, otherwise will be just duplicating 10% being coming to the fund, sorry, to the Reserve Bank for reserves. As you are aware, the Reserve Bank all talk about this gold reserves. That's where they come from. There's also an instrument, and the Reserve Bank Act was changed accordingly after 2022 to do so. And now, because the fund was not operational during 2022, but the act remains intact. So we've made a recommendation that the need for policy and the alignment of acts to ensure that at least one, you can have both. If it's both, it means that otherwise we're taking the whole money, all the money from the government and into the other bank and or the fund. This is why the auditors they come up with that observation that we've observed that act is still in existence, but we're not collecting money. Because they were advising that no, we're not collecting because there is now conflict in the policies of the government. And we've since that's why they also observed that we've made a recommendation for the amendment of the act. That's the position.
Thank you. We now go to governance and accountability.
Yes, Chairman. There's a question here on the board of directors. Whether they were aware of the accounting departures from Ifis before the audit was issued, and whether there were any representations that were made by management, and what action the board had taken in response to clarify the.
Thank you, Chairman. The board was aware. That's why the board approved that we do independent evaluation of these assets to ensure that when the audit comes out, there will be some fair value on the number. So yeah, the board and management were aware of IFRS 9. That's why we did what we did during the course of the year, and that's why the auditors were able to get some numbers of the fair value of assets. Their question was that this thing was supposed to be done before creation of Mtapa, but it's more like as I said, chicken problem, because and then you can't value yourself before you are there. So that's what. But otherwise, yes, the board was aware, and the board also ensured that the management put in place measures to ensure that numbers are valued.
Thank you. We now go to any supplementary questions that the members may have. I'll probably start. So I've listened attentively to what you're saying, and that you have not got any mining royalties as Mutapa Investment Fund. So in creating this sovereign fund in 2015 and subsequently renaming it in 2023 and adding all these other government entities, the whole idea behind Parliament was that we create a fund for future generations, that the country has funds and then you reinvest those funds elsewhere, so that Zimbabwe has money, and that in any case of shocks that may come to the economy in the future, we know that we have a sovereign fund as Zimbabwe. But from what you're saying, I'm slightly worried that since 2015, now we're in 2026, that's 11 years since we have had a sovereign fund in the country. We seem not to have any reserves per se. Instead, we're still grappling with governance issues. And I want to ask you that question again on governance. So number one, how much can you say the sovereign fund has, so Mtapa, that you can safely say, this is the money that we have? I'm not talking about assets of your entities, but money that you have kept, or you now have as Mutapa as our sovereign fund. Then number two, on that one, there is a plethora of governance issues within your entities. And just last week, we had NRZ appearing before this committee. We also had a Zimbabwe Consolidated Diamond Company last week as well. Previously, we had default mines, and most of your companies are appearing before this committee because of governance issues. So how can you make us confident that Mutapa is reining in all these companies to ensure that there is good governance, which would then mean they are profitable, and those profits can then be used to reinvest so as to get the sovereign fund on behalf of the people of Zimbabwe? Thank you.
Thank you very much, Chairman, for this very coordinated question. I say coordinated because every end, you've also already defined what Mtapa is all about. Chairman, let me start by saying that since 2014, 2015, when it was published, or when the Parliament approved 2015, nothing was done in terms of collecting the royalties and development surpluses and the fiscal surpluses to build onto the fund for reinvestment purposes. It's because of the nature of the economic challenges that the economy has been facing. We never had a fiscal surplus during that period up to now. We never had a balance of payment surplus for us to be able to raise funds for redeployment or reinvestment in the fund. Now, this is why in 2023, therefore remodeled, that the remodeling of the fund, or that the assets now of these entities is now the money for the fund. In other words, we need to sweat those assets to create, for them to be commercially viable, for them to be profitable, for them to declare a dividend, which dividend will come in to build the fund. That's now the thought process, which is what we are doing. So our job is to sway those assets. And so far we've done so, Chairman. Out of the entity that we've got, about 6 companies or 5 or 6 companies have declared dividends. And we need more of that dividend to come to Mtapa so that we can be able to increase the fund position. And also we're going to joint ventures. Elsewhere, we need to look at the commercial viability of entities, and then we do structures that will help the economy. Because of these structures, we'll be able to structure facilities to assist these entities so that they'll be able to move. When we talk about cash cows, Chairman, we need to utilize fund from this to this one to increase all the companies go up together as a team. And you've spoken, you said very well about these other 3 entities. We agree with you that corporate governance remains to be the major weakness within these entities, within the public enterprises. And we're working on that to ensure that we improve on it. And it's gradually being done, Chairman. We can never overpromise, we can do it overnight. We now have 1.5 years when we're working on the Mtapa, and we have done a great job so far in an 18 model that we are working on, and ensuring that the companies they behave in the manner that's acceptable. There was no general manager at the NRZ. There is now going to be one, I think starting in April, which will be after the interviews. And we're working with the ZCTC. ZCTC, as you know, I think the issue that they've got in non-payment of wages is also basically because there's a change in the diamonds, synthetic diamonds. The global price of diamonds has gone down. And ZCTC default is major. So ZCTC is major entity which has a default. And therefore, find that this is what the good work in progress. So, Chairman, in short, what am I saying? I'm saying that we hear the edge for us to do more, that you can create the fund faster. That we hear. We're hearing the edge that can you deal with the governance issues in these entities. That we hear doing it. We hear that time does not wait for anyone. More faster. Chairman, we've taken note, and your voice has been very clear to us. Thank you, Chairman.
So we'll go 1, 2, 3, 4.
Thank you very much, Chairperson. I think we have all seen reports in the media concerning the 1.9 billion in treasury bills that were issued to Mtapa. Can the Mtapa Fund confirm this amount? Because the figure has just been, we just got different figures from the media. Can you confirm the amount, provide the specific terms of these instruments, including the interest rates, the exact maturity date, and if there is any guarantee that the government issued? And also, on the valuation, how is this 1.6 billion reflected in the valuations that the amounts that you have given us? Thank you.
Number 2.
Okay. Thank you, Chairman.
My question is simple. I know the CEO is good at quoting the Bible. So I wanted to say, Matthew to invite Jesus to come and dine with him. So I'm just wondering, from your standing as Mtapa, whether you will be, if this committee would want to visit 3 of your stars, 3 of your cash cows, 3 of your question marks, and 3 of your dogs, to ascertain, yes, I know the time is, it's one of the affairs, it's still a very limited time. But generally, the reason why I say this is primarily to just ascertain that what you are saying is actually happening on the ground.
Honorable Thank you, Honorable Chair. Mutapa Investments has taken over a massive portfolio of assets. We talk of about 30 companies. And I hear you are saying you turn them around. Is it realistic to expect that these 30 massive companies will be turned around in the foreseeable future? Not only turned around, but also ensuring sustainable viability. By sustainable viability, I'm referring to long-term profitability. And whether Mtapa Investment has the core competencies to be able to run such a massive organization with varying requirements for skills, investment, funds, and so forth. And also whether Mtapa has the capacity to raise that money which is required to invest in such a massive portfolio. If you look at the mining portfolio, you have companies like Mangura, Consolidated Mines, a company like Nyati, which are massive companies, which I think is, I don't know, whether Mtapa will be able to raise those kinds of funds. And lastly, is it not part of your mandate, or is it not advisable that you consider possibly disposing of some of these assets so that they can help in terms of actually funding the investments that are required for this massive portfolio? Thank you.
Thank you, Honorable Chair. My question is regarding the issue of governance issues within Mtapa, specifically the issue of board of directors. I would want to ask Dr. Mangold that if there are any members of the board who sit in the board and who also sit in the subsidiaries that you oversee, because this is arising from the issue of maybe a conflict of interest. Thank you.
Thank you, Chairman. Let me start with the last and go forward. None of our board members sit in the Tickerman's board, also 40%. It's conflict. So all our board members, they only sit in Mtapa, seated in Mutapa Investment Fund board. And they are very competent board members, both international board members, local and regional. So yeah, they are all seated in Mtapa. The Mangold, you raised a number of issues. We've got the capacity to turn around the entities under Mtapa. And it's doable. As I said earlier, to be able to raise quite a substantial amount of money in the first year of operation. Raise over 600 million that we raised. the lowest capital that there is a bank. So we said to them, that's going to 10 million, so they'll be able to only to their customers, so they can also increase their capacity of doing business. I spoke about silo area, providing them with funding so they can be able to purchase maize, so they can mill ground maize, and they also sell. The likes of NRZ will be able to extend credit facilities to them so they'll be able to secure, say, hiring or leasing locomotives to increase to their existing fleet so they have a proof of concept so they move. We've been doing that, and right now we are sending capital to Zimbabwe so they move. So most of these companies, Chairman, they were so undernourished. Therefore, a combination of what they're trying to do and what they've been doing, we do believe that they will see hope in what they were doing. So the capacity over capacity, we also want them to have capacity to repay. I've said many times in this country that as Zimbabweans, we only have one weakness from wanting to pay loans on time. If ever. That's why NPOs, banks sometimes end up not providing funding to businesses. We need to instill a discipline of repaying capacity. So far, we've advanced about $100 million to these entities from the facilities that we put across to support with capacity. So capacity to repay should be that embedded in the companies, and therefore us to manage them. So you are very right. You are also right that one of our mandates is that the primary mandate turnaround is good, right? But if we find that the turnaround of this entity is incorrigible, if you can't do it, then the sale becomes the option. Right now, we are doing consolidation. We are doing amalgamation. We are doing rebundling. We're almost done. Rebundling so that this will become efficient. So ZPC, TDC, the holdings, they're just like mushrooms, right? So we have rebundled them so it will improve efficiency, self-delivery. That we're doing more finishing. Capital approved it. We make work on it, and we're now at the end, whereby we need to governance, we get the approvals from Zimbabwe, approvals from the lenders, approval from Zera and others. We've gotten all those approvals to show that it is a lean, mean institution to deliver to Zimbabwe. We're working on the likes of our insurance companies, a number of companies on insurance. Self-insurance, ECGC, is a number of them. So what are we doing? Again, we are working on amalgamating them. So that becomes one formidable underwriter. It's also for underwriting business. You want to put capital. So that's what we are doing. We're looking at an entity like your telecom agencies, Net One, Tier One, Telecel, African Powertel. Again, we need to work on that. We're working on that. So at the end of the day, we put consolidation. So before we sell, we can get more value by then bringing an investor into a consolidated what? And then get more money for the purposes of what the chairman said, to create value for this country. So, chairman, we are doing all what is humanly possible to show that this company is a turnaround. Over the heart, in the knowledge that what we are doing is doable. So there's and some people need to give themselves time to do so. So that is my response to one of them. The one is of the visit, Honorable Florio. We are happy. We're very happy to accommodate park to see 3 of each entities under the fund as evidence-based. After this presentation, go to know it, or better trade or POSB. go to a silo and see. Then can also see for yourself what was there, what is there, where we are going. I'm very confident. So the answer is yes. I'm very confident in being able to host you to these entities. Because we have confidence. If you look at the fertilizer value chain, fertilizer is very important for food security. Without fertilizer, there's no farming. Again, we're working on the fertilizer value chain. In Dorowa, sustainable chemicals, where we're doing a renounceable rights issue. So the Mtapa will be the major shareholder in Sebo, so it can produce the necessary fertilizer. We've already granted Dorowa funding that is required for refurbishment. So they'll be able to produce basal phosphate for basal fertilizer. That we're working on. So yes, we're very happy through the chairman, of course, to come for you to visit and have evidence-based. And after that, you'll also be able to know what you are saying here and what's on the ground there in the correlation. So that one we are happy to do so. The issue raised by Honorable Wendy concerning 1.9, luckily enough, it is a part of the audit. Annual report, the audit is there clearly to confirm that 1.9 billion was indeed reissued as treasury bills Mtapa for the purchase of 35% in Coimba, and that the amount of 1.9 is a future value in 10 years' time. Otherwise, the treasury bills were issued for up to 10 years, which means that the future value of the treasury bill is also of the amount you paid, 1.9. And so the current value, which is also in this book, in this audit report, is the current value of that 1.9 is 1.1 billion. So in these numbers that auditors went through, there is a figure of 1.1 billion being the current value of the future value of 1.9. Was a loan of 10 years. But one say, what is the value today? It's 1.1. So that amount to pay is 1.9 in 10 years, after 10 years time. It's a grace period of 5 years, payable at interest of 5%, which is a statutory interest rate, 5%. And so it means that during the course of the business of Mtapa, we raise money from all these structures to ensure that the money is paid to government so that there is no loss of value by government by purchasing those assets. In fact, we are so happy right now that that asset is gone up significantly so because of the gold price has gone up, lithium price has gone up, so it's platinum prices. So as I said by Honorable Mangwani, it means that sometimes I say, you know what, why don't you just sell this asset to realize value 1.1? You sell like that, not even 35% now, but even say lower, and then realize the value and pay off for a government of Zimbabwe. So yes, indeed it was the auditors looked at it and they went through the numbers and that's position. Thank you, Chairman.
Just follow up. Okay, follow up. Then last question, Honorable.
Just on the 1.9 billion, maybe we since it's an issue that is arising from this meeting, which maybe if we can ask them to, when they send the other documents that we requested for, if they can then also identify the payees that received payment from that 1.6, maybe as part of the documentation that they submit to Parliament. Thank you.
So I just wanted to add on Honorable Wendy, earlier on you said part of that money used to pay 35% of Kovimba. And again, maybe what is needed is how the valuation of that 35% to then come up with that figure, whether there is a valuation system that was put in place for you to ascertain that value.
Thank you, Chairman. Mine is simple. I just wanted to first let me appreciate the work that is being done by Chairman and his team as Mtapa. My question is, who is funding your operational costs, including board fees, top management salaries, and other operational costs, looking at the huge work that we are doing? Who is funding that? Is it the national budget? Is it the proceeds from your companies? You take a percentage from there? How are you doing funding on the operation side? Thank you.
Thank you, Chairman. Once again, thank you for the questions. Let me start by Honorable Korio to agree that if you look at page 129 of the annual report and also the financial statements, the notes that were given by the auditors confirming that 1.9 billion and how it was spent in the 1.133 as a loan with a future value of 1.9. It's all in this one. So that was there. But I also hear what you're saying about valuations. And we will be very happy as you said earlier, requesting to have evidence based. But I'm saying this, Chairman, because we are also aware that a number of information and misinformation and disinformation will be said about this 1.9. And I think it will be a privilege to entertain, after you say that question concerning the visit to 3, we can include, by the way, we've now, there's no more going back now. We've put all the vertical companies. We now have Mutapa Gold Resources, Mutapa Energy Minerals, Mutapa Agro Minerals. We don't have Mutapa Base Metals and Mutapa PGMs. We don't have the, because if you look at what's happening, default and Kovimba, some of the entities, they had some cross-shareholding. In other words, you find in China mine, default we have 50%, Kovimba we have 85%. So to us as management, and as a board, it was obvious that we need to do something. We can't control the default. Kovimba, yet for same entities. So we now have the verticals. So for easy management, and so we need for attracting investors. They know what they're coming to invest. Either they come in lithium, or they go to gold, or they go to base metals. So that's why we've done, Chairman, because we are people on a mission to deliver. And we want to deliver values. So we'll be very happy for you to come and see the values of Kovimba, which are now in these categories, or gold, or lithium, Sandawana, and then we'll be very happy. Otherwise, yes, we'll give you that information. What is required, the evaluations. Then the issue about funding. Our initial funding on the establishment came from government. For 9 million or 10, let's go 10 million per board, which is also there in the accounts. And then thereafter, we are from dividends and management fees, we are able to sustain ourselves. We are a leading main institution which is supposed to deliver value mainly from our team and also from outsourcing. So yes, we get management fees, and our management fees are very low. Instead of looking at the turnover, what many people may come and do, we've done it using the payroll or a small percentage of the payroll. So at the end of the day, why did you do that? Very simple. But if the companies don't do well, also don't do well. Companies doing well, also do well. As opposed to revenue. Revenue before maybe revenue before EBITDA. Never made the making come and make losses. So we've done that. So yes, management fees, small fee, and the dividend policy. We've also now come with the dividend policy. From what the chairman said earlier, we come out with the dividend policy. We say that 50% of the net profits should be declared to Mtapa as a dividend, so we can create the value for the nation faster than if we deliver, say, 10%. In Ethiopia, their dividend policy 70% of net profits. Here, we say 50% net profits. So if they all declare dividends, that the report of will come here next, after 1 year, we will tell you that we put how many millions of dollars in the pot. So that's what we're doing. Thank you, Chair.
Thank you. Okay, so first of all, I want to thank you, the CEO and your team, for coming. What Parliament did was, as you know, when we relaxed the rules so that the red tape is removed away from Mtapa, it was so that, there is more dividend that is coming in terms of red tape. I mean, the amendment to the Finance Act, which also amended the Mutapa Investment Act, and to lessen the requirements such as procurement and so forth. That was done to ensure that there is more work is done without the stringent rules that affect many of the government entities when they want to procure and do business. So we obviously look forward to Mutapa being a driving force and getting those dividends for our future generations as a sovereign wealth fund. Before we conclude our report, we will have those verification visits to ascertain the ground position of Mutapa Investment Fund. But otherwise, we will then, after that, we'll then conclude our reports and our recommendations to government. But I want to thank you for coming here, and the committee is very happy to ensure that you function in the manner that you are supposed to function as our fund. Otherwise, thank you very much for coming. And
thank you, Chairman, and all honourable members of Parliament. We are greatly indebted to yourselves as PAC and also the whole Parliament of Zimbabwe. And I want to assure you, Chairman, and members of Parliament, that definitely we'll do our level best to ensure that we utilize the dispensations that the Parliament has given us according to the Mtapa, to the best of our abilities, in line with our Constitution of Zimbabwe. If you look at our section 194 and 195 of the Constitution, it talks about good corporate governance. It talks about providing information on timelinessly, and the 195 speaks about good procurement. So whenever we're going to relax because we got a dispensation, we're going to act in line with the Constitution, which demands that our operations need to be done in such a manner that is competitive to all other people when they need it. And also, Chairman, to assure you that we are ready at the time when you are going to advise us. We'll let you visit those 3 or so companies per sector in terms of the small ones, big ones, dogs, and the cash cows. So I know there you've got a fair appreciation. Once again, Chairman, on behalf of my team and that of the board and also staff, I want to thank you very much and wish you well during the day. Thank you, Chairman.
Thank you very much.
Thank you.